What's going on, everybody? All is well. So today I have three stocks that are on my watch list that I will be either acquiring more shares of or establishing a leap option position on those shares. So when the market runs back up to close out the end of the year, those stocks and those leap options contracts, they're gonna print. Now, obviously, today is September 1st, so September tends to be a down period in the stock market because, historically speaking, September, the stock market tends to pull back a tad bit. Now, the S&P 500 hit all-time high last week. So right here, August 28th, it hit a new all-time high of 649, and the very next day, August 29th, it pulled back. It fell off a cliff. So it fell all the way back down to 643. Now, tomorrow we shall see if this downward pressure continues. If the market continues to sell off, we shall see. If this is the beginning of the downward trend in the stock market for the month of September, just so that it can rally back up at the end of the year. All right. So right now, let's look at the Fear and Greed Index. Well, currently we're still in the greed territory. Obviously, tomorrow, if the market continues to go down, we'll be back at neutral, and then fear, and then extreme fear. Now, if it ever pulls back to extreme fear, that's the ideal time to acquire shares of companies that you know, like, and love. Because if it hits extreme fear, pretty much the whole market is going to be in the red at that point. And from there, this is also an indicator that once it hit extreme fear, eventually is going to reverse course, and it'll start to work its way back towards extreme greed. So the Fear and Greed Index is a great indicator that tells you what's the current sentiment of the market and where is it going. All right, so let's get into my three stocks that are on my watch list. Starting off with Lyft. Now, Lyft, in my opinion, long term, will continue to increase their revenue year over year. And let's see, past 5 days, they're down 4%. Now, I believe they're going to run right back up to test that 52-week high of 1906. Right now, it's sitting at $16. Now, if they pull back, let's see, $13, anything, 13. Let's see, where's another 13, 12. Oh, right here. Oh, that's in April when it was $9 a share. And from there, it just took off to 17. Now, will it come back to $9? I don't really think so, but I would love to see it come back to 19, because I would definitely be buying a leap option on it and run it right and just wait until it reverses course. Now, if you had bought a leap option in April at $9, this move right here, a leap option, if you got in at $9 and you just held it and wait for it to run up to like 17, this move right here from $9 to 17 in a leap option is good money. That is really, really good money right there. To go from $9 to 17, that's great money, actually. So now the 52-week high is 1906. So we already know it's gonna retest that. Let's round it up to $20. That $20 price target. We know it's gonna test that, and long term, like I said, I believe they're gonna continue to increase their revenue year over year. So I believe eventually they're gonna um, break out to the $19 price target, and they're gonna continue to run higher, in my opinion. So any pullback on Lyft, I would definitely be establishing a leap option position on Lyft, and just uh, sit on it, and just wait for it to run up. Cause you catch another move, a move like this right here, like from $9, like I said mentioned earlier, this $9 to $17 move in a leap option. That's, like I said, there's great money to be made right there. So let's say it pulls back, just an example. Let's say we catch it pulls back to like 13, from 13 to $20 in a leap option. Great money. That's good money right there. All right, so I'll be keeping my eye out on Lyft long term. I believe in this company. I believe it's going to continue to grow year over year, and I'm definitely looking to acquire or establish a leap option position on Lyft on the for January like 16, 2027. That's how far my expression date is going to be out on that leap option. All right. Next up is Robinhood. Yes, Robinhood is another platform. They continue to increase their revenue year over year, and I believe, first of all, I know they got a lot of controversy. They had a lot of flack, but that I love their user interface. It's so simple to. It's not a lot of stuff on the screen. It's easy to maneuver, to navigate, and I just love their user interface. Now, me personally, there's another stock I believe will continue to grow. It just hit a 52-week high of 117, and right now it's sitting at 104. Now, like I said, I'm being patient. Right here was at 108, and it fell to 102. All right, if this goes below $100, let's say like the 95, the 90, or the 80 range, I would definitely be getting into a leap option, and again pushing that expiration date out till January 15th, 2027. Because, like I said, I believe this company will continue to increase their revenue, and it's going to continue to grow. So let's say it does come pull back to that like 91 range, 93, $91 range. You catch a leap, you establish a leap option here, and you just sit back and wait for it to run right back up to its previous this 52-week high, which is 117. That $93 to 117 in a leap option, like I said, is good money to be made right there. But we shall see how far it pulls back from to. Like I said, I'm just waiting to see if this downward if the market continues to sell off, and on any little pullback or dips, I'm looking to establish a um a leap option on Robinhood for sure. All right. All right. Next up is Palantir. Listen, Palantir, man, this company right here is a money making machine. Now it just hit 52-week high of 190. Right now it's sitting at 156. Right off the bat, you already know it's gonna retest that 190 52-week high. So any pullback, this stock I'll be looking to acquire more shares of. And let's look for the past year is up 400%. 400%. That's insane. Year over year, I mean year to date is up 108%. 6 months is up 87%. 1 month is up 1%. But yeah, if this pulls back, let's see, like the 130 mark, the 119, I mean 110, if I ever see it at 110, 130s, or even if it goes below 100. Personally, I don't think it will, but who knows, if it goes below 100, oh yeah, I'll be definitely be acquiring more shares of it, because like I said, I'm a long-term investor. I'm gonna buy this quality company up when it's low on a pullback, and just sit in it and wait for it to run back up. Which eventually it will. Now, I know now the market, the next rate cut meeting, if Jerome Powell decides that he's not gonna cut interest rates, that he walk back his if he closed the door on cutting interest rates, the stock market is gonna absolutely tank. Because at the last meeting, he said he's optimistic, he's open to rate cuts, and the market took that positive news, and the market went up, shot up, right? Now, if he does decide to walk that back and say, you know what, we're not cutting interest rates anymore, the stock market is gonna drop. And like I said, him walking his talk on cutting interest rates back, that is just another buying opportunity in the market, because ultimately the market is going to recover. All right, so we shall see what happens at the next the next Fed rate cut meeting. We shall see. But right now, like I said, I'm just waiting to see if this market continues to sell off, since we're in September officially, and I'm just gonna take it from there. All right, but yeah, those are the 3 stocks that are on my watch list. And with that being said, thank you guys for watching. Like, comment, subscribe, all that good stuff, and I'll catch you guys in the next one. All right, peace.